Howdy, Jacob here. Today we're looking at Shoals Technology Group, ticker symbol SHLS. In the electrical equipment industry, looks like they provide electrical balance of system solutions component for solar, battery energy, and electric vehicles. Been around since 1996. 1.8 billion market cap, slightly higher enterprise value. Return on invested capital is pretty low actually right now, but has been as high as 32% in a year. But growth is absolutely outstanding, so no surprise there because return on invested capital is based on essentially some portion of their earnings, and so the fact that they're reinvesting a lot, likely to grow this business, is pretty impressive to even have these numbers with this type of growth with margins in the upper teens, low 20s, pretty impressive. Gross margin 34%, as high as 40%. Balance sheet shows 23 million cash on hand with 179 million in long-term debt. That 179 million in relation to their rolling 12-month is just over 2 years, but still no concern, I would think, from the balance sheet perspective. I don't think their balance sheet's going to be giving them any trouble, especially with them being able to. They've paid down this debt for the last 3 years, so they have been focusing on efficientizing their deleveraging their business and such. Their 5-year average free cash flow maybe 40 million, and it looks like they've just been paying down debt and just reinvesting back in themselves. They made a small acquisition over here of 13 million, issued quite a bit of shares in 2021. It looks like they went public at that time, so no surprise there. Especially February of 21 was when everything went as crazy as could be, so no surprise that's when they IPO'd. Probably made a lot of money from that, so that's great for them. Since then, a little bit of issuance through stock-based compensation, but otherwise issuing of common stock elsewhere is not occurring. Yeah, this will be interesting because we don't have a whole lot of data to work off of here, but we are looking at enough data to make some assumptions that we can feel relatively good about. But let's start with some assumptions here. So revenue growth, it's been absolutely insane. I question whether they're able to grow at these types of rates. Me being as conservative as I am, I'll probably narrow it down to maybe 15% revenue. At the end of 7 years, I think that there's clearly going to still be growth ahead of them. They are at 489 million, and that type of growth, 15% growth for 7 years, is still going to put them at just a 1.3 billion revenue company. I think there's well over that in the industry that they're in, so there should still be good growth ahead of them. I think uh, a 25p in price free cash flow at the end of 7 years, saying that there could still be double-digit growth for quite a while to come. And because they're growing so much, I don't think that these margins are what they're really going to be. I think I would not be surprised if they were a little bit higher. I wouldn't say they're going to be crazy high since these gross margins are still only 30 to 40%. We're not looking at some crazy software business that's as high as 80 to 90% like Adobe or something, but we are still seeing good margins. So I think I would not be surprised if it were something along the lines of a 17, 15. And then they're still issuing a bit of shares uh, just through their stock-based compensation and such, but that's not affecting them that much anymore. So maybe 2% increase of shares, and yeah, we get to a price that needs to fall 11%. There are a lot of frothy assumptions here. This is why I get a little skeptical with companies that are growing so much. You really have to balance out history with the story and conservatism and everything. Maybe if I were to I think just because there's little history with this type of company, I might just increase that slightly, but that's still putting us pretty close to the return that we're looking for, given given these figures, and so probably not too much longer until I do some more research on this company. I think that I'd really want to look at what the growth rate is for this type of industry, and their sector specifically. What's the growth rate? How are they taking over some of the business in their industry, or are they getting taken over? I mean, I don't know how they'd be getting taken over with these 30% revenue growth, but yeah, I'd really want to do more research on whether these assumptions are appropriate, whether the revenue growth is still going to be there, and then what I think the growth of the business and sector is still going to be after a 7 year period. But yeah, it shouldn't be too much longer till I do that analysis, given the fact that we're already pretty close there. So hopefully you enjoy the video and have a great rest of your day. Thank you.